Hey folks, see Rachana Ranade here, and I welcome you all to the IPO analysis of IQ Lighting Limited. I'm not in my house right now, so you might see the background is a little bit different. I'm at my mom's place, so was in two minds whether I should, do this live stream right now or should I do the live stream like every other IPOs, when I do the live stream on the last day of the IPO, somewhere around 11 a.m. But then I thought, let me just give you a quick brief analysis about what this company is all about. Very important. I'm not only going to talk about what this company is about, we're also going to quickly discuss their products. We're quickly going to discuss the industry that it pertains to, the financials, the risks, and very important, whether I'm going to apply or not. And I'll try and wrap this up in the next 7-8 minutes, right? So I just would want 100% attention of yours, so that you get to know whatever I want to convey you. Okay. So here, I'm going to take you to my website, rachanaranade.com. We have gone to the blog section, and in blog section, I'm just going to scroll down to, here it is, IQ Lighting Limited IPO analysis, right? I was checking out a management interview, and the question was asked as to why is this IQ? What is that? So the management said, like, we have IQ, intelligence quotient. It's like IQ, but in a different spelling, IQ. Okay, and they said that we want a good IQ for our lighting. So that itself made me pretty interested in the company, the way in which they have named their company. But if I want to quickly talk about what does the company do, it's basically a company which is an ODM, so original design manufacturer. Okay, so what do they do? They design, they develop, they manufacture, they supply products to whom? To the customers, and then who then further distribute these products under their own name. So you can imagine something like, I'm Philips, okay, and I want to I want to manufacture certain bulbs like this, okay. So it could be LED lighting like this, it could be such an LED light, or it could be LED fittings and fixtures. I'm sure everyone has seen such lights, okay. So I want to make this light. What Philips does is that gives them entire contract that you manufacture these lights for us. Ultimately, branding. So this entire thing will be this entire LED along with its fitting, along with its fixture, will be manufactured by IQ. That will be sent to Philips. They'll do the branding and then they'll sell it in the market. Essentially, we can call such companies as contract manufacturers as well. And those who are my pro investor members, we had covered Dixon Technologies as one of the pro investor member stocks. That is one of the peers of IQ, right? Other than lighting solutions, what do they manufacture? They also manufacture lighting solutions to commercial refrigeration equipment. So like I told you, they manufacture such LED lights, they manufacture such LED fittings fixtures. Other than that, refrigeration lights, I'm sure you might have seen such nice well lit refrigerators, especially at shopping malls. So such refrigeration lights are also manufactured by whom? By IQ. So these are certain refrigeration light drivers. These are like printed circuit boards, PCBs. Okay. Plus they also manufacture something like regulators of fans, light strips. Okay. So this is what they manufacture. But in addition to that, they also manufacture an alternative to PVC piping called as ABS piping. Okay. That's ABS is basically one of the specialty chemical that is used to make that pipes. And this ABS piping, this is primarily used by US customers for plumbing applications in the recreational vehicles that they fit out. So if I were to talk about recreational vehicles, I'm sure you have watched Swades, and in Swades there is a caravan, right? So that caravan is an example of a recreational vehicle. So they also make such PVC pipings for them, and ultimately, like I told you, fan regulators and this that. So four major products. So I want everyone's attention one more time. Four major products. Number one, they are manufacturing a lot of LED lights including. So here you can see these are their four product categories: LED lighting, refrigeration lights. Remember the images, right? LED lighting, refrigeration fits, ABS for the caravan and other vehicles, and other products in which I talked about the regulators. Okay, so we have at least understood what does this company do primarily in lighting, agreed, but at what pace is this specific industry? They call it as EMS, that is electronic manufacturing services. At what rate is it expected to grow? It's expected to grow at a CAGR of 5.4%. Is it that impressive? If you ask me, answer is no. But if you check in their prospectus, you'll also find this figure. that the India's EM market was estimated around $20 billion USD with a market share of 2.2% and is expected to grow. Very important, expected to grow at 32.3%. So if you see, globally, it is expected to grow. The CMS market is expected to grow at 5.4% CAGR. But the Indian scenario is that the expected CAGR is 32.3% CAGR. That tells us the growth story. But what could be a possibility? How come there is a big surge in this sector in India? Has the government taken certain initiatives? Answer is yes again. They mentioned this that growth of the smart lighting market is owed to the government's push in the terms of smart city mission, digital India programs, as well as rising adoption of smart homes across the country. Okay, what are they going to do with this money that they raise? They're going to do a prepayment or a repayment of certain borrowing. They're also going to invest in the wholly owned subsidiary of IKIO Solutions Private Limited. They're going to set up a new facility at Noida, Uttar Pradesh. Basically, capex plans are on the way, and whatever money is raised, a part of that is going to be utilized for expansion. And the third one is general corporate purpose. So basically, this IPO is a split of fresh issue and OFS. Okay, whatever is the OFS, of course, will be received. The money will be received by the promoters. Whatever is the fresh issue, that will be utilized for the objects that I mentioned right now. If you see financials, very good. Total income, just have a look at this increasing trend. By the way, this data point is 9 months data. So 12 months will be definitely much more than this. If you check EBITDA, EBITDA is also in a growing trend. EBITDA margin percentage is also at 20.71%. That's a huge EBITDA margin. Now you may ask me, what is so big? See, if you understood properly, I said this is a contract manufacturing company. And if you see something like Dixon, at EBITDA margin, I don't remember the exact figures, but at EBITDA, they might be doing around 5 to 6%. Okay, 5, 6, 7%. At net profit margin, so they are around 3 to 3%. Okay. When I read this for the first time, how can I was confused. How can they make 20.7% EBITDA level when they are a contract manufacturer? So again, when I watched few interviews of the management on the internet, they specifically said that this question has been asked by many people, and they said there are two reasons for this why we have a high EBITDA margin. Number one, they said that because they have other products as well. Remember, we talked about all these products that the company does. You can see that on the screen. Now, for few products, whenever it's about pure contract manufacturing, the EBITDA margins are definitely lower. But because they do these plumbing applications solutions for recreational vehicles, typically for the US customers, they said their margins are pretty high. So that is the reason why both put together they are able to generate a higher EBITDA. Plus, they also mentioned that higher EBITDA is possible because they have a very nice backward integration. See, if they have a good backward integration, it means that raw materials also they are manufacturing rather than purchasing them from outside. So that is the reason why they are having very good EBITDA margins, right? Even if you check net profit margin is also very impressive, 14.2%. As I mentioned, net profit for their competitor, someone like Dixon, that's barely around 3%. So very impressive net profit margins as well. Earnings ratios, if you see, a little bit on a decreasing trend, but still, if I'm talking about 9 months ended data, ROCE at 18% is good. ROE at 27.31% is impressive. See, typically, ROEs will be fantastic in the initial years and they may stabilize at a specific number. So it will be interesting to see where do these numbers stabilize. Now, if I were to check out the valuation part, company is valued at a good level. Their PE is below the average of their competitors like Dixon, Amber, Sirma, and Elin. And PB, it's a little bit on a higher side, but overall, it surely tells us that there is some space which investors will definitely agree that yes, there are chances that there'll be a return on investment. Now, if I were to check out the premium, how much is the premium, how much is the subscription? Let me quickly tell you key risks as well. In that, one biggest key risk that I felt was their customer dependency. One customer accounts for 70% of their restated revenue from operations. That's a big number, right? But 70% from one customer agreed. But again, when I was checking out their management interview, management had said that we and Philips, we have a very good understanding. We have been working together for years together. And they said, just to give you an example, we started with just two SKUs. SKUs are basically stock keeping units. They said we started with two SKUs business together, and today they have almost 500 or 550 plus SKUs that they do for Philips. So I think that's a pretty big number, and agreed that that's a risk. But according to the management, they said we don't feel that anything can go wrong between the company and Philips, right? One more risk that they mentioned, that company is dependent on and derives a substantial portion of its revenue from LED lighting products. So if you see the revenue bifurcation, majority of their revenue is coming from LED lighting. And if something happens to the business, then if something happens, if there are a lot of competitors which come into this segment, their business can get materially impacted. So I have mentioned few risks here in the blog as well. I felt that these were the two most important risks that I wanted to highlight. That is the reason why I just read out balance points. If you want to read, I'm just going to quickly put this on the live stream, and I will also pin this so that you can check out our blog. Don't forget to check that out as well, right? It'll give you good insights. And ultimately, final point is about the IPO details. It started yesterday, will end tomorrow. Gray market premium, when we wrote this blog, it was at 25.26%. But if you check the live GMP right now, it is at 44.92%, and it has been even subscribed, fully subscribed. In fact, oversubscribed by 7.02 times, even QIB at 1.3, RI at 6.18. All in all, if you ask me, is it a good IPO? I feel yes. Question, am I going to apply? Answer is yes, I'm going to apply. Through how many accounts? All 5 accounts. Okay, so feels that there is a possibility of a listing gain as well, because I showed you the gray market premium also. Always remember, gray market premium is just an indication. It will never happen that exactly same amount of profit you will get, not at all. It's just an indication. Subscription is also very good, financials are good, industry growth looks pretty positive. So all in all, I'm pretty excited for this IPO. We'll be investing in this through all 5 accounts. I hope you enjoyed the short and sweet live stream, barely 10-12 minutes, whatever. And don't forget to share this with your friends as well, those who are wanting to know more about this company. Till then, take care. Jai Hind and bye bye.